Welcome to Integrated Planning, where we take an integrated approach to growing and protecting your wealth. Today we're going to demystify compensation in the insurance industry. One of the most interesting things that we run into in the insurance industry is traditionally insurance products are thought of as just that, they're thought of products. They're not thought of services that would be part of an ongoing integrated advisory delivery service. And when products are being purchased, assumption is being made that compensation is being paid. However, that compensation is rarely disclosed. At WealthCo and within the integrated advisory community, we like to let clients know exactly how much compensation is being earned on their contract, because it's our belief that we are delivering an ongoing service to you as part of that planning service. When insurance is being positioned with clients, typically they should be asking themselves, is what I am looking at purchasing appropriate? Do I need it? What is it? How is it being structured? And when or where does it pay out? And to whom does it pay out? Oftentimes we find that when we're coming in after the fact with our partners in the integrated advisory community is that those questions haven't been asked, or perhaps they were asked, but they're certainly not remembered. So by asking those questions up front, clients are then becoming aware of whether or not they're being sold or whether or not they're acquiring something of value. As it stands today in Canada, commission disclosure on insurance products is not required. It's not something that we as a firm agree with, and certainly it's not something that other countries agree with, where commission disclosure is in fact required on insurance products, be they life insurance, health insurance, group insurance, etc. However, we don't feel that we can truly begin to professionalize the insurance industry without continuing to deliver the compensation disclosure as we deliver it today. So we want to let our clients know exactly how much is being earned on their policy, because it sets up the expectation that ongoing service is going to be provided in concert with their financial planner. For example, life insurance commissions are typically derived as a result of a percentage of the premium that is being paid into the insurance contract. For example, if a $1,000 premium is being paid on an annual basis, in that first year, roughly 35%, probably 35 to 45% of that premium would be returned to the advisor in form of compensation from the insurer themselves. So between $350 and $450 of compensation would be paid on that $1,000 premium. That's stage one of the compensation, which is why part of this conversation is so difficult, because there are multiple stages in terms of how compensation is paid. The second piece actually comes from the distributor of the insurance contracts and the contracts that we would have with those distributors within Canada. So in addition to what the insurer would pay, the distributor of the insurance product may pay an additional percentage of the insurer's commission that has already been paid. And that percentage can vary greatly, but for example's sake, let's say it's 100%. So in addition to the $350 that's been paid from the insurer, another $350 would be paid from the distributor, resulting in a $700 commission. So in total, on your $1,000 premium, the insurance advisor has earned $700. You can then be in a position when you understand how much commission is being paid as to whether sufficient value is being delivered based on the amount of commission that you've received, in this case, that's $700. Now, if proper planning has been done along the way, the need has been established, you agree with the need and you determine that the need that you've established is sufficient to make you and your family comfortable, fantastic. Because the likely benefit down the road is going to be a multiple of what that commission is. It's likely for a $1,000 premium, it could very well be $500,000 of benefit at some point down the road. Now, the difference between the insurance industry and, let's say, the investment industry is that the insurance industry pays compensation only once, and they only pay it in the first year. And because of that, the compensation oftentimes seems like it's a little bit out of whack. It's a little bit high in terms of relative compensation paid on on other services that you would acquire through the financial services industry. However, when you take into account that the insurance industry is looking historically and determining their compensation based on the future value of all compensation that would be earned on that policy, and then just present valuing that back to pay it once, that makes it easy for them, it makes it easy for the broker, and it makes it easy to understand for the client. However, it also incents poor behavior, because as soon as we sell an insurance policy to you, the compensation's paid, I'm not going to be compensated again on that policy, so average broker is then going to move on to the next guy and say, well, that's great, that put food on my table for this week. Next week, I have to go find another client. That's not how we operate. We want to be with you along this entire planning path and ensure that the work continues to be done, because life isn't linear. Life is not a straight line up and to the right. We understand that needs change, situations change, jobs are, improved, jobs are lost. Marriages start, marriages break down, deaths occur in a family, etc. And that's, those types of things need to be accounted for. And if your insurance broker isn't around to assist you with that, you have to start all over again somewhere else. Now, I don't want to sound like I'm being too harsh on the industry that I grew up in and I love. I've been doing this for more than 26 years, and the industry has come a long way in terms of trying to clean up its perception in the financial services community. So even within the last 5 to 7 years, licensing has become a little more complex in terms of being able to acquire a license to sell insurance products. So the barrier to entry is a little more difficult to jump into. Financial advisors are also required to attain and maintain basic designation qualifications to maintain their status as a financial advisor. So things are trending in the right direction. We just feel that we can take the additional step of adding compensation disclosure and letting clients know exactly what their advisors are earning on all of the products that we work with, because they deserve it. They deserve the transparency. If you enjoyed this video, be sure to subscribe to our channel. If you'd like more information, please feel free to contact your integrated advisor or your CPA.